You wake up, you check your phone, and there's a notification from your bank. Your account has been locked. Your investment was automatically reallocated. Your credit application was denied. And here's the part that makes you furious. You didn't do any of this. Nobody asked permission. Nobody explained why. Welcome to the world of banking AI agents. And they're making decisions about your money right now. My name is Jordan, and I spend a lot of time thinking about how financial institutions manipulate you without you even knowing it. If you're someone who trusts your bank, who thinks your financial decisions are being made by humans, or who just wants to understand why your money disappears in ways you can't explain, make sure you subscribe to the channel and hit like on this video if it helps you, because what I'm about to reveal today is going to completely change how you see your financial institution. Here's what most people don't realize: banks aren't using AI to protect you. They're using it to profit off you. And the AI, it was trained to do exactly that. This is happening right now. Let's start with real numbers. According to a 2024 Federal Reserve report, approximately 67% of American banks have already implemented or are implementing AI systems to make automatic decisions about customer accounts. We're talking about Morgan Chase, Bank of America, Wells Fargo, the big players. But here's where it gets interesting. These AI systems aren't transparent. They're not regulated the way you'd think they should be. And most importantly, they're not designed with your best interest in mind. Let me give you a concrete example. Sarah is a 32-year-old marketing manager in Austin, Texas. She's been with her bank for 8 years. Good credit score, around 750. Never missed a payment. One day, she logs into her account and sees something strange. Her bank's AI system flagged her account as high risk based on her spending patterns. Now, what did Sarah do wrong? Nothing. But the AI noticed she made 3 large purchases in 1 week: a laptop for work, a flight home to see her family, and a car repair. To the AI, this looked like unusual activity, potentially fraudulent. So the system did what it was programmed to do. It froze her account. Sarah couldn't access her own money for 72 hours. No explanation, no human review. Just an algorithm making a decision that affected her life. And when she finally got through to customer service, the representative told her, the system flagged it. We can't override it now. You might be thinking, okay, but at least the bank was trying to protect her from fraud, right? Wrong. Here's what the majority of people don't understand. These AI systems aren't designed to protect you from fraud. They're designed to protect the bank's profit margins. Let me explain the difference. The training data reveals everything. Look, I'm going to be direct with you. The way these AI systems are trained tells you everything you need to know about their real purpose. Banks don't train their AI systems on data that says, protect the customer at all cost. They train them on data that says, maximize profit, minimize liability, reduce customer access to credit. Here's a real example of how this works. A major US bank, let's call it Bank X, trained its AI system on 10 years of historical data. That data included which customers defaulted on loans, which customers made large withdrawals, which customers applied for credit multiple times, which customers had irregular spending patterns. Now, the bank's AI learned to recognize patterns, and it learned that customers who fit certain profiles were more likely to cost the bank money. So, what did it do? It started automatically denying credit applications to people who matched those profiles, even if they had perfect payment histories. Why? Because the AI was optimizing for one thing: bank profitability, not customer welfare. According to research from the Brookings Institution, AI-driven lending decisions have resulted in a 23% increase in credit denials for minority applicants compared to white applicants. Even when controlling for credit scores and income, the AI wasn't programmed to discriminate, but it learned to. Because the historical data it was trained on reflected decades of discriminatory lending practices, the AI simply replicated and amplified those biases. Now, you might be thinking, okay, but my bank wouldn't do that. My bank is reputable. And here's where it gets really interesting. The consent you never gave. When you opened your bank account, you signed a terms of service agreement. It was probably 40 pages long. You didn't read it. Nobody reads it. Buried in that agreement, usually in section 7.3 or something equally obscure, is language that says something like, we may use automated systems to make decisions about your account, including but not limited to account restrictions, investment reallocations, and credit determinations. That's it. That's your consent. You didn't consent to AI making decisions about your money. You consented to a legal document you didn't understand, written by lawyers whose job is to protect the bank, not you. And here's the psychological trick. The bank knows you won't read it. They're counting on it. In fact, a study by Carnegie Mellon University found that if the average person actually read and understood every terms of service agreement they encounter, it would take them 76 workdays per year. So the banks know you're not reading. They design these agreements knowing you won't. That's not consent. That's exploitation of human psychology. The real risks. What these AI agents actually do. Okay. So let's talk about what actually happens when these AI systems take control of your financial life. Risk number 1, account freezes without explanation. Your account gets locked. Your money becomes inaccessible. The AI flags something as suspicious. And now you're locked out of your own funds. How long does this last? Could be 24 hours. Could be 30 days. Could be longer if the bank decides to escalate it to a human review, which might never happen. Meanwhile, you've got bills due. You've got rent. You've got a family depending on you. And the bank, they're not liable, because the terms of service say they can do this. Risk number 2, automatic investment reallocation. This one is sneaky. Your bank's AI system notices that you have money sitting in a savings account earning 0.01% interest. The AI has been trained to recognize this as an opportunity. So it automatically moves your money into a higher yield investment product, maybe a mutual fund, maybe a structured note, maybe something more exotic. Now, you didn't ask for this. You didn't authorize it. But the AI did it anyway, because it was programmed to increase the bank's fee revenue. And here's the kicker. If that investment loses value, you're responsible for the loss. The bank isn't. According to the SEC, there have been over 100 complaints in the last 2 years about unauthorized automatic investment reallocations by major banks. Most customers didn't even notice until they checked their statements months later. Risk number 3, credit denial based on algorithmic bias. You apply for a mortgage. You have a 780 credit score. You make $120,000 a year. You've never missed a payment in your life. The bank's AI system reviews your application and denies you. Why? Because the algorithm learned that people with your demographic profile and your zip code, with your employment history, are statistically more likely to default. So it denied you preemptively. You never get an explanation. You never get a chance to appeal to a human. The algorithm made the decision, and that's final. This is happening right now. According to a 2023 analysis by ProPublica, AI-driven lending decisions have resulted in $10 billion in denied credit to qualified borrowers who didn't fit the algorithm's preferred profile. Follow the money. Here's what you need to understand. Banks are not in the business of helping you build wealth. They're in the business of extracting wealth from you. And AI is just a more efficient tool for doing that. Let me break down the economics. A typical large bank has about 50 million customer accounts. If the bank's AI system can increase fee revenue by just $5 per account per year, through automatic reallocations, investment pushes, and credit denials, that's $250 million in additional annual revenue. $250 million. And that's just from a $5 per account increase. In reality, it's much higher. Now, here's the psychological part that most people miss. When a human banker makes a decision to deny you credit or freeze your account, you can argue with them. You can appeal. You can demand an explanation. But when an AI makes the decision, you can't argue with the machine. You can't appeal to its sense of fairness. You can't convince it that you're a good person who deserves a chance. The AI doesn't care. It's just executing its programming, and the bank knows this. They know that most people will just accept the AI's decision because they think it's objective and final, but it's not objective. It's biased. It's biased toward the bank's profit, not your welfare. The regulatory vacuum. Now, you might be thinking, isn't there a law against this? Isn't there some regulation that protects me? And the answer is not really. The Fair Credit Reporting Act requires banks to explain credit decisions. But there's a loophole. If the decision was made by an AI system, the bank can claim that the explanation is too complex for a human to understand. The Gramm-Leach-Bliley Act requires banks to protect customer privacy. But it doesn't say anything about AI systems making unauthorized decisions about your money. The Dodd-Frank Act was supposed to regulate financial institutions more strictly. But it was written before AI became a major tool in banking. So there are huge gaps. In other words, there's almost no regulation of banking AI systems. The banks are essentially operating in a regulatory vacuum, making decisions about your money with almost no oversight. The Federal Reserve has issued some guidance about AI risk management, but it's not binding. It's just recommendations. And most banks treat it as a suggestion, not a requirement. What you can actually do right now. Okay, so now you know the problem. The question is, what do you do about it? Here are the concrete steps you can take to protect yourself from banking AI systems. Step 1. Audit your account permissions. Log into your bank's website right now. Go to Settings. Look for sections labeled Automated Decisions, Account Management, or Investment Services. Write down every permission you've given the bank to make automatic decisions on your behalf. Now, ask yourself, did I actually authorize this? Do I want this? If the answer is no, revoke the permission immediately. Most banks will let you opt out of automatic reallocations, automatic investment recommendations, and automated account management. You have to actively choose to opt in. But here's the trick. The default is always opt-in. The bank assumes you want them to make automatic decisions unless you tell them otherwise. So change the default. Opt out. Step 2. Request manual review for major decisions. If your account gets frozen, if your credit application is denied, if your investments are reallocated, demand a manual review by a human. This is your right under the Fair Credit Reporting Act. The bank has to provide it. When you request a manual review, you're forcing a human to actually look at your situation and make a decision. And humans are much harder to fool than algorithms. In fact, studies show that manual reviews overturn AI decisions about 30% of the time. That's a significant percentage. So if you ever get an adverse decision from your bank, don't accept it. Request a manual review. Make them explain it to a human. Step 3. Diversify your banking. Don't keep all your money with one bank. Here's why. If one bank's AI system decides to freeze your account or deny you credit, you have other options. You have access to your money elsewhere. Open accounts at least 2 different banks, preferably banks with different ownership structures. Maybe one large national bank, one regional bank, one credit union. This does 2 things. It protects you if one bank's AI system malfunctions or makes a bad decision. It gives you leverage. If one bank treats you poorly, you can move your money to another bank. Banks hate losing customers. So if you have the option to leave, they're more likely to treat you fairly. Step 4. Monitor your credit report obsessively. You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once per year. Get all 3, read them carefully. Look for accounts you didn't open, credit inquiries you didn't authorize, negative marks that don't match your actual payment history. If you see something wrong, dispute it immediately. The credit bureaus have to investigate within 30 days. Why does this matter? Because your credit report is the data that banks' AI systems use to make decisions about you. If your credit report is wrong, the AI will make wrong decisions. So keep your credit report clean. Monitor it constantly. Step 5. Document everything. When you interact with your bank, keep records, save emails, take screenshots, write down dates and times of phone calls. Document what you were told and by whom. Why? Because if something goes wrong, if your account is frozen, if your credit is denied, if your investments are reallocated, you'll have evidence. And evidence is your most powerful tool against a bank. Banks hate lawsuits. They hate regulatory complaints. They hate bad publicity. If you have documentation showing that the bank violated your rights, you have leverage. Step 6. Know your rights under the law. The Fair Credit Reporting Act gives you the right to know what information is being used to make decisions about you, dispute inaccurate information, request a manual review of automated decisions. The Equal Credit Opportunity Act gives you the right to apply for credit without discrimination, know why you were denied credit, appeal credit decisions. The Gramm-Leach-Bliley Act gives you the right to know how your financial information is being used, opt out of certain information sharing practices, know these rights, use them. If a bank violates your rights, you can file a complaint with the Consumer Financial Protection Bureau (CFPB). The CFPB has the power to fine banks and force them to change their practices. This is about power. Here's what really bothers me about this situation. It's not just about money. It's about power. For decades, banks had power over you because they controlled access to credit, to loans, to financial services. You needed them, so they could treat you however they wanted. Now, they're using AI to automate that power, to scale it, to make it invisible. You can't argue with a human banker, but you can try. You can appeal to their sense of fairness. You can make them uncomfortable, but you can't do any of that with an AI system. The AI doesn't care about fairness. It doesn't care about your situation. It just executes its programming. And that's exactly what the banks want. They want a system where they can make decisions about your money, extract value from you, and you have no recourse, no way to appeal, no way to fight back. That's the endgame of banking AI. But here's the thing. You still have power. You have the power to move your money. You have the power to demand transparency. You have the power to hold banks accountable. The question is, are you going to use it? So here's what I want you to do right now. First, Go audit your bank account. Check what permissions you've given your bank to make automatic decisions. If you don't recognize them, revoke them. Second, if you've ever had an adverse decision from your bank, a frozen account, a denied credit application, an unauthorized investment reallocation, request a manual review. Force a human to look at your situation. Third, open a second bank account at a different institution. Diversify your banking. Don't put all your eggs in one basket. Fourth, subscribe to this channel, because I'm going to keep revealing how financial institutions manipulate you, and you need to know about it. And fifth, share this video with someone you care about, because they're probably dealing with the same AI systems, making the same mistakes, and they don't even know it. Your financial future depends on understanding how these systems work and protecting yourself from them. So take action today. Don't wait. My name is Jordan, and I'll see you in the next video.